Hello, everyone. I was perusing the interwebs and I came across this article on Bitcoin.com that I thought was pretty interesting. And it's not even that it's interesting, it's just that there were a couple of, factual tidbits in here that just kind of caught my eye. It says 80% of institutional investors expect crypto to overtake traditional investments, survey shows. One, I always wonder exactly how they conducted the survey because they got over 28,000 respondents from 23 countries across North America, Latin America, Europe, Africa, Middle East, Asia Pacific. And among them were 50 senior management, institutional investment strategy decision makers, and over 23,000 were retail investors. So, quite a bit of people, and you can always wonder exactly who determines, what level of institution investment strategy manager that you are, what qualifies you to be that. They don't give you what the survey show. I think they should just give you the survey, show you what the survey was, so you can kind of help determine exactly like how good the survey itself was. But what I thought was interesting is that not only that over 85, high 80s percent of institutional respondents and over 75% of retail investors believe that crypto will see mainstream adoption within the decade. I think that's pretty cool. But what I really found, mainstream adoption within the decade, it's like everyone getting the internet or everyone getting a cell phone. But what I think the really cool part is the fact that over 54% of these people think that crypto, it's Bitcoin, will overtake traditional currencies within 10 years. Over half of people think that Bitcoin or crypto will overtake traditional currencies within 10 years. So how soon do we get to, like 75% or 90%? How long does that take? 20 years to get to 90%? I think there's some sort of curve like that, adoption curves in terms of like the amount of time that I think it's called an S curve, where it's the amount of time that it took for up to 10% adoption it'll take the same amount of time for the next 90%, or for the remaining 90%, or to get to 90%, I believe it was, because then you still have a remainder of 10% that take forever to adopt. So, like, I'm sure there's some people out there still using ice blocks for their refrigerator or something. The last little thing on here, of course, Kevin O'Leary likes it. He was at Bitcoin 2022. I found it kind of funny is that, Grayscale, the CEO, Michael Sonnenschein, said that the SEC approving a Bitcoin spot ETF is a matter of when and not if. And I think it's funny he said that because, they've threatened to sue. Grayscale has threatened to sue the SEC. This was over a month ago, so I can't believe I just caught this. But they threatened to sue the SEC if Spot ETF is denied. And the SEC still, to this day, has not approved any sort of Spot ETF. But, I was kind of thinking about it, like, why do institutions need a Spot ETF? I don't quite understand that. I'd maybe understand not wanting to invest in a futures ETF, but not having a spot ETF is what is preventing them from actually investing in Bitcoin. Clearly, these companies, institutions, anyone, you can just go out on the open market and you can just buy Bitcoin. So I don't exactly see what exactly the hurdle is. I think there might be just like risk of holding your own keys, holding your own coins, and maybe large institutions don't want to do that. And so thereby, an ETF is a vessel by which somebody else holds your Bitcoin for you. It essentially introduces one of the aspects that most Bitcoiners like about Bitcoin is that there's no trusted third party. The ETF, Spot ETF, introduces a trusted third party. and quote unquote trusted. So exactly how trusted are they? But they do buy Spot ETF and they do buy Spot Bitcoin and they hold the actual physical Bitcoin that is deliverable if you so demanded it. What I just don't think that institutions are really realizing is that this ETF, if it is approved or not, it's just a vessel so that you don't have to hold your own Bitcoin keys. And holding your own Bitcoin keys, once you get familiar and used to the idea and you're more comfortable with it, it's really not that difficult. Guys, you can hold your own keys. You should hold your own keys. MicroStrategy should be holding your own keys. I hope Block is holding their own keys. Get it off Coinbase. Get it off Binance. Get it off Kraken. These exchanges are good for buying Bitcoin, potentially, depending on exactly how much privacy that you want to give up, how much KYC that you want to give up to people, and we can go down that avenue in another video. But what I think institutions need to understand and realize is that the SEC may never approve a Spot Bitcoin ETF, and we're gonna move on without you. Lots of money, lots and lots and lots of money is gonna be made in Bitcoin. And if institutions want to get in, they will find a way. They will change their charters. They will, consult their board of directors and their investors and their employees and their, insiders and whomever else. And they will decide that, the risk of holding your own keys is outweighed by the amount of return that you can. The return is infinite. Okay, the return is the all addressable amount of wealth on the planet Earth and then some. Okay, that is the entire market for Bitcoin. So the risk is potentially then losing all of that if you are not secure with your keys. But there again, you start splitting it up. You get them into smaller wallets, and you realize that you don't need to hold everything in one place, and that holding keys is not a scary thing. Okay, just get used to it. I think institutions just need to buckle down, get used to the idea, and actually just do it. So that's what I have for you today. I appreciate y'all's time, and I'll talk to you in another video. Thanks.